Hey everyone, welcome back to Corporate Decoder. Today, Reliance Global Group Incorporated just filed a Form 8K about a significant asset sale, and I am seeing one deal breaker that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is selling a big piece of its business, and the details here are pretty important for understanding where they are headed. Reliance Global Group Incorporated is making a move that could really change things for them. They have signed a letter of intent, which is like a preliminary agreement, to sell off most of the assets of their subsidiary called Altruis Benefit Consulting. This is their health insurance agency and benefits consulting business located in Michigan. Now, this letter of intent is not the final deal. It is non-binding when it comes to the main terms. Think of it as a handshake agreement before the lawyers get fully involved. However, some parts are binding, like keeping things confidential and agreeing not to shop the deal around. The company has agreed not to look for other buyers or negotiate other deals for Altruis' assets or even its stock from the 30th of July until the 16th of October. This exclusivity period is pretty standard to allow the buyer to do their homework. The proposed sale price is a cool $11 million in cash. That sounds like a lot, but it is important to look at how that money will actually come in. About $9,350,000 will be paid at the closing, but that amount could change a bit depending on the working capital of the business at that time. The rest, around $1,650,000, will be put into an escrow account. This is basically money held aside to cover any potential problems or claims that might pop up after the sale. Like if the buyer finds out there were hidden issues with Altruis, this escrow money, along with any interest it earns, will be released to Reliance Global Group 18 months after the sale closes. They are aiming to get this deal finalized by the 24th of September of 2026. But, and this is a big but, this all depends on a lot of things. They need to iron out the final binding agreements, plus the buyer needs to be happy after their due diligence, which is like a deep dive into the business. They also need to make sure Altruis can keep its important carry appointments, get lien releases from lenders, and get approval from other third parties. The buyer also needs to secure their financing, meaning they need to find the money to pay for it. Here is where it gets risky. The filing explicitly states that there is no guarantee they will actually sign final agreements, or that the deal will happen on these terms, or even happen at all. Deals can fall apart for many reasons, especially when they depend on financing or satisfactory due diligence. This is a crucial point for investors to consider. The company is also putting out a standard warning about forward-looking statements. They are saying that what they expect to happen with this deal, like the timing and how the money will be used, are just predictions. These predictions are subject to risks and uncertainties, and they might not come true. They are not promising to update these predictions if things change, unless the law says they have to. This is important because it means you should not rely solely on these statements about the future. This whole announcement was made public on the 3rd of August 2026 through a press release. Even though the letter of intent was signed on the 30th of July, the company chose to announce it a few days later. The press release is included as an exhibit, which means it is part of the official filing. Now, let's look at the company's stock. Reliance Global Group Incorporated's common stock trades on the Nasdaq Capital Market. Under the ticker symbol EZRA, the market cap is pretty small, around $2 million with a current price of $2.57. The P/E ratio is an unusual 0.8. which often suggests the stock might be undervalued or that there are significant concerns about future earnings. The stock has a very wide 52-week range, from $1.75 to $78, indicating extreme volatility. Interestingly, just a few days before this filing, news reports from early August 2026 mentioned that EZRA's stock was spiking. Some headlines talked about a deep value picture emerging and shares surging over 100%. This surge happened without a clear catalyst, which often points to momentum trading or short squeezes. Especially for a company with a small market cap and low employee count like Reliance Global Group, which has only 40 employees. This recent stock activity happening right before the sale announcement makes the timing of this filing quite interesting. The news about the sale of Altruis Benefit Consulting for $11 million in cash was actually the headline that broke this story on the 3rd of August. This is the event that the 8K filing is elaborating on. It seems the company decided to make the deal public before the final agreements were in place, likely due to market interest or regulatory requirements. Adding another layer to this story, a report from the 6th of August mentioned that Reliance Global Group sold about 251,666 shares for $716,000. This looks like a separate transaction, possibly an offering or a sale by insiders. If these shares were sold at around $2.85 per share, it suggests that the company might be raising some cash or that existing shareholders are cashing out. It is important to distinguish this from the larger $11 million asset sale. The filing is signed by EZRA, who is the Chief Executive Officer of Reliance Global Group Incorporated. This is the person at the top who is overseeing these significant strategic moves. Now, looking at this whole situation, Reliance Global Group is selling a business unit for $11 million. On the surface, this seems like a positive step to streamline operations or raise capital. However, the fact that the letter of intent is non-binding and there are significant closing conditions means this deal is far from guaranteed, considering the company's small market cap and the extreme volatility in its stock price recently. This sale could be a crucial move to either stabilize the company or signal a deeper issue. The risk I am watching is whether the buyer will actually go through with the deal and if the terms will hold. If this sale falls apart, it could have a significant negative impact on the company's stock price and its ability to execute its strategy. What I am actually looking for is how the company plans to use the proceeds from this sale, assuming it goes through, and whether it will significantly improve their financial health and operational focus. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.